Good morning, traders. This is Brad Matheny. Today is, let me check real quick. I believe it is the 6th of October. This morning was a very busy day. Let me highlight what happened this morning. We had this deep selling on the jobs data, indicating that the jobs market is hotter than expected. This means that the Fed is likely going to have to keep rates higher and be a little bit more aggressive. Markets sold off extensively. I had been telling some of my followers who had a lot of questions about Fibonacci Price Theory. We saw this deep rotation in the morning, then we rolled over. Failure to establish this new low. Remember, we came down here, broke down to this low, and then broke to this low, and then failed to establish any new lows after this. We ended up coming here, and then retested this low here. Okay, now this area here, this failure to establish new lows after this point is a very strong indication of, more emails. This is a very strong indication of a potential bottom. Now, we don't know that this potential bottom is going to occur until we see it be rejected. Now, we need to look for other price confirmation. We need to look back here on, say, a 10-minute chart, and we need to look at historical, what are called ultimate highs and lows. So ultimate highs and lows are highs and lows that do not exist within 15, 20, 25 bars prior to it. So we have an ultimate low right here, carrying this forward. We have a ultimate low here. And then we have another ultimate low over here. Now, what are the importance of ultimate lows? And again, remember, I'm down on a 10-minute chart. So this is all very, very short term. Okay. Ultimate lows mean they are critical support. They will be broken if price attempts to go lower. Ultimate highs, which occur at the top, where we do not have any previous bars, and I'm going to highlight this one. Got to make sure I at least grab the line draw tool. Ultimate high. And you can see we have intermediate ultimate highs across here. And across here, which is already tagged. Okay, so what does this mean, folks? Okay, this means that we have ultimate lows here. I'll change the color of these. And ultimate highs. Highs act as resistance, lows act as support. Ultimate lows become our critical areas for price to be able to reject and or break through. So you can see here, we had a couple of ultimate lows back over here. Price came down below these levels, then rejected, then retested, then rejected. At this point, we have a very strong indication that this is a major bottom setup and likely going to rotate higher, which is what I called this morning. You take a look here. This is a chart that I sent to my users this morning, my members. It's telling us here that we have price closed above unique high level, but was rejected. Make sure this is correct. I think this is, yep, this is today. But was rejected. Failure to rally above the 425.40 level will result in a downward price trend. This was before the jobs data. Intermediate resistance zones here at 424.34, 420. Sorry, I did this wrong. 424.10, 423.53, and 423.06. That's these yellow areas here. And current unique low represents a substantial downward price objective at roughly 421.17. So now we got the jobs data, and the jobs data hit, and I wrote this to members indicating price must attempt to rally to new highs if it fails to continue making new lows. Pay attention. So at this point, I highlighted here these ultimate lows. This is an ultimate low on a 30-minute. This is an ultimate low off of these previous areas here, and this is an ultimate low here. So basically, rejection here means that it has to try to move higher. Price always attempts to establish new higher highs or new lower lows all the time. If it cannot establish a new lower low, it will attempt to establish a new higher high. If it cannot establish a new higher high, it will roll down and attempt to establish a new lower low. That's how price works, and that's the basis of Fibonacci price theory. Now, once we establish this low, it's very, very clear based on my Fibonacci targets that we're moving up into other areas. Now, let's take a look at the next chart I sent. This was the ultimate low, ultimate high, trigger levels, and I highlighted this point as a standout low, representing new standout low represents a potential turning point in price. If price is able to breach this level and confirm, not reject, then we would have an intermediate term bearish trend. That's not what happened. This is where it rolled down, rejected, and then rallied up to 426 and higher. Ultimate high up here represents the bigger, broader representative high-low breach levels for the longer term. So here's your ultimate low, here's your ultimate high. Continued rejection of this standout low means price will want to move higher. And that's exactly what happened. Price rejected off of these lows, came down, rejected, and took off and rallied up to this 427 even higher level. So now this is Fibonacci price action or price theory at work. So now we come back over here. We've gotten up to massive numbers here on almost 4,300. I'll take a look at the SPY later. But what we're going to do now is we're going to go to daily. And we're going to take a look at how does this play out. You've seen the intermediate trend. You've seen what happens here. Where is our ultimate high? Okay, we have an ultimate high level up here. Move that a little bit. We have another ultimate high level over here. So these are our ultimate levels. Where is our ultimate low? Ultimate low right now is currently right here. That's the newest, most recent ultimate price low. Historically, we can come all the way back over here and potentially drag this as an ultimate low. So historically, we have 404, 405 on the SPY or 4051 roughly on the SPX, the ES. This is what we're looking at, the SPX 500. And beyond that, I mean, we have an ultimate low right here, which will come into play potentially as a support resistance level in the near future. And that is at roughly 433 on the SPY. Could become an upside target for rotation back to the downside. So understand that on a daily basis, we have broken through this ultimate low. We are now in a downward trend. This indicates that we are in a downward trend. And I guess I'll try to draw that with an arc. So I'll try to draw that here. Downward arcing trend. We are not in a bullish trend. We are in a bearish trend. And based on a daily chart, on an intermediate chart, we go back to the 10-minute, and we are in a bullish trend. Okay, so we are in a bullish trend now, rallying up to our resistance levels potentially. And obviously, if I go back even further on a 10-minute chart or a 30-minute, let's go to 30-minute, because I will be able to pinpoint ultimate highs and ultimate lows all along this process. So here we have an ultimate high, clone. So we have an ultimate high back over here. And look at where we're now running into resistance. We have an ultimate high back over here. And how do I determine ultimate highs? They've got to be highs that have not been reached in the last 20, roughly to 25 bars. So I'm just counting how long it's taken for this high to establish. An ultimate high is a high price peak, like a pivot, that has not been touched in the last 20 to 25 bars, typically on a longer term chart. A standout high or standout low is a low that has been reached within the last 20 to 25 bars. So, for example, this would be a standout high because it has been reached. This would be a standout high because it has been reached in the last 20, 25 bars. These would be ultimate highs because they have not been reached in the last 20 to 25 bars. So this was an ultimate high that got broken. This was an ultimate high that got broken. This was an ultimate high that has yet to be broken, except right over here. We got broken today. This is an ultimate high that is currently being tested and showing some signs of rejection. So this is how you look at it. Now, rejection, let's come in here and take a look at this. Rejection at this price level, I'll go down to 3-minute. Rejection at this price level would indicate that we are seeing price fail to establish a new high and will then attempt to move downward. So we have rejection already here. We have rejection already here. This is a pretty good sign that we're going to get rejection at some point in the near future. What we want to see at this point is a lower high-low setup that breaks this downward channel. And that would give us real solid confirmation right across here that we get the break of the downward channel. Right now, traders should be pulling profits. They should be sitting aside and trailing stops. If this rejection continues, we will see a lower low, a lower standout low, which could be this low that's setting up right here. But ultimately, it'll roll down, roll over, and then roll back to the downside. And at that point, we will have confirmation that this ultimate high level is acting as major resistance and likely to move back to the downside. So I'm going to highlight this as a light pink color. And we are going to, I think, leave it at that. So understand that where we're at right now is we are at a ultimate high. We are at testing out the ultimate high level just above 4,300 on the SPX 500. This means that we could see a rejection at this level, which is what I've drawn here. Or if we fail to see the rejection, we will see this rally up, stall around, and eventually break to the upside. And that would end up being a carry through trend, prompting more extended rallying. Okay. So at this point, we are pretty likely with this rejection here to move downward and set up this type of a move, maybe coming back into these ultimate high levels, maybe moving all the way back down to here. But remember, failure to move to new highs and establish new highs means that price will attempt to move lower. That's how Fibonacci price theory works. It is a process that price is always attempting to move up or down all the time. Okay. And again, if you come to my website, which is on my videos, you'll learn how I look at the markets and the specialized tools I use. You know, for example, I have a right over here, a specialized Fibonacci tool that I share with members. This is now breaking downward. We have a Fibonacci trigger level. We have a bullish trigger level, a bearish trigger level. And then we have our confirmation level here. You can see that we've rallied all the way up. So technically at this point, ladies and gentlemen, within this tight little range, we're neutral, still bullish from this trend. We do not have a bearish trigger yet, but we are neutral, looking for a new breakout trend. If we get up above this level, 429 roughly, 429.55, we'll be back into rally mode. And if we get down below this level with confirmation, 427.80 roughly, we are going to be looking at a intermediate downward trend. This is a 3-minute SPY chart. So I hope this helps, and I hope you understand where we're at in this trend, and I hope this helps you understand how Fibonacci price theory works. Remember, back over here on this daily chart, I want you to remember that we are still in a bearish trend. So understand that even if we rotated upward, we would have to get above this level right here, 430, 43.36, and that would put us in an intermediate bullish trend because we have not yet taken out these ultimate highs. We have to get above this level right here, 45.36.70, in order for us to establish a new longer-term bullish trend. Okay, guys, I hope this helps, and I hope you can learn from this and start to use this more effectively. All right, guys, thanks a lot.